All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I guess it's morning for most of us, but yeah, afternoon. Been watching the markets for a little while. I woke up and watched the European session and some of the stuff going on. I guess that's what happens when you're a little bit of an addict here in terms of the market. And so anyway, market's been off and rolling here in the U.S. for about an hour and a bumpy start, here for it. So let's get to it. Let's start with the challenge. We have GOLD, Barrick Gold, on the board here, and it's trying to push on higher, up about 3%. Trying to pierce that upper Bollinger Band, retesting the high from the end of December and the end of January. So it would be nice to see it, bust on through there. We are looking at a price target here of 1934 as the initial target. We still have a ways to go to get there. About 35 cents to get there. But current option value here is $1.25. So let me log that in and we'll move forward. So that puts challenge, a couple $100 over 4,000. Yeah, we've just been in this kind of 3,500 to 4,500 range now for pretty much since the Netflix trade. So Dollar General, Procter and Gamble, J.P. Morgan, Barrick here have just kind of bounced us around in that level. It would be nice to see it, bust on out. Now, we do have plenty of cash available for another position. So what's on the board? Well, on the downside crossover list, you think, okay, today the market's down. There'll be a bunch of downside crossovers. There's only one. And it's a stock that was an upside crossover yesterday, and that's Triple M. It's not going to signal to the upside. It does have a chance to signal to the downside here. One of the components that will come into play and that will matter is, does it have the potential to move two average true ranges? And that's what I'll be looking for here in the afternoon session. But on the bullish crossover list, you think, well, there are not going to be a lot of bullish crossovers. Market's down today. There are actually five, right? One of them is gold, right? And we see gold trading on higher, this morning. Here just a little bit. Beautiful chart, right? We saw a bull signal on gold come in a few days ago, and pulled back for a day or two, but trying to push on higher once again. We have Facebook, EOG, Vulcan Materials, and Walmart, and Vulcan's been dancing between upside downside. This is one that crossed over to the downside yesterday. I mentioned it just doesn't have a chance to trigger. We saw it just pretty much rallying back the entire day, so no put ability there. And then on the call side here this morning, consolidation risk is sky high on it. It's about as high as it gets with the with the algorithm. Walmart here it has a nice little kind of 3-7 upside crossover. This is something where we do bump into earnings. It's not going to be something that I can play. So at least Facebook and EOG. Now, Facebook has reported earnings, and you can see the big gap down on the earnings. This does have a chance to trigger here today. It is a potential. Now, it's one where we have a downside, 20-day moving average, and the Stoke 39.1 just slightly below 50. So, it could trigger. The odds aren't great, but it could. We'll kind of see. We do have that kind of higher low element that was set earlier this week, and then we have EOG Resources, and we've talked about some of these energy oil names. A lot of them just kind of look the same here, and this is one where the stock's down today and has an upside 3-7 crossover. We don't see it all that often, but it has seemed a little more common so far this year. And it's just, as the third day of trading, as a big down day gets lopped off the moving average, it, boosts the moving average up a little bit there. But, we see things like Halliburton, and we see things like, Conoco and whatnot. They're all about the same chart here when it comes down to it. Now, yesterday, I was, I was sitting there looking at Triple M. And one of the things about the challenge is, the challenge has the right pace of signals, here. so far this year. It is absolutely the pace that it's built for and designed for. The challenge performance is lagging a little bit. We're up, but I would like to be in that 8 to 9,000 area by now. So we're lagging that. But we're gonna have that, right? We're gonna have some that are better than normal, others that lag a little bit, and we're in that lag. But as far as signals go, we're still in a very strong spot here, and it's one where I look and I go, okay, we saw last year there was a company, Caterpillar, right? And Caterpillar did this thing where it had a big sell off, and then it had an upside 3-7 crossover coming off of a new low, and we never got a trigger. Right, it did it right here. It wasn't off of a new low, but where we had a huge downside, 20-day moving average, and then it happened again back here in May, right, where none of these crossovers triggered bullish for Caterpillar. And you can see what the stock did afterwards. It just, went on an absolute climb. And then, we saw earlier this week, we saw Caterpillar with an upside crossover, but same type of positioning, right? New low here on the board after some heavy sell, downward slope and 20-day moving average, no trigger, right? And so, yes. All right. Is there a reason to go back and maybe identify these elements as a trigger? Because we had one of these with Triple M, right? Where it's coming off of a low, yeah, downward slope at 20-day moving average, yeah, but Caterpillar's had this action and just gone higher a lot, right? And we saw this same type of action with Triple M, with Halliburton, right? And they weren't upside signals yesterday. So I started going through the numbers, and it was one of the reasons why I was up so early this morning. Just couldn't get my mind off it. I'm going through it, looking at different stuff. And, it really, in a rather rapid way, got me to look and say, no, it's worthless, right? While I can look at Caterpillar and say, hey, you know what? Boom, that worked, right? It is something where if, we apply and look at the basket of stocks and look at these types of entries and say, well, yeah, I'm going to go buy a Triple M on a day like yesterday or a Halliburton on a day like yesterday. It simply doesn't pay, and it is one of the more negative, performances there with it. So odds not in the favor. Option prices tend to be a little bit higher, and, it's one where when it goes against, it tends to go against big. So there's just no real reason there for it. So I kind of just, all right, I'll keep running with with what I have and what is working. But I thought I would share that because, from time to time I get, hey, this had a nice crossover. Why don't we just go get into it? Why don't we just go, yesterday? Why don't I just go get into a Halliburton, right? Why don't I just go jump into it? It has the crossover. Let's apply the ATR method and go. Well, it just simply comes down to the odds aren't in my favor. And when it comes to the challenge, we're looking for higher probability of trend. Doesn't mean we're going to find all trends and predict all trends, right? We're just looking for the ones that are a little more predictable, a little more probable, and where those probabilities are in our favor, and where we can apply options in a challenge, in a challenge style there. So I thought I'd kind of share that with you here just a little bit. Now, there is a stock on the Dow here this morning that is green, or was green earlier today, and that is Caterpillar, right? And Caterpillar is a stock that we have talked about many times over the years, and it's one that we've talked about from an investing standpoint, and it is one that I have not been involved with for quite a while now. And there's been good reason. We've talked about it. We've talked about some of the eroding numbers with Caterpillar. Had a beautiful run here in 2016, 2017. We did a lot of videos on why Caterpillar was strong, why it should continue going up. And then we saw the numbers change in 2018. And this morning, Goldman Sachs came out and they upgraded Caterpillar from neutral to buy. And they said it has a 20% upside, and they talked about some margin tailwinds for the stock, and some inventory troughs for the stock, and some metrics that, frankly, when it comes to how stocks move in the long term, just don't matter. So if we go and we look at the metrics that ultimately matter, what does Caterpillar look like? Is it investable right here? Well, for me, absolutely not. And the reason being is that if we look at revenue and we look at revenue projections going forward, take a look. Revenue has boosted up, and the stock grew on this revenue growth, right? And it was this revenue growth that we saw turn here in 2016 and 2017 that was the big, catalyst for the upside, and the thing we talked about a lot. The problem is now their revenue is starting to fall, and their projected revenue going forward is still for declines. Stocks with revenue declines rarely have massive gains in the shares. It does happen from time to time, but it's very rare. Yep, we can get a bump up in the stock while revenue is declining, but to really see a strong, heavy, investable move, no, we just don't see it. So I'm willing to trade it. I'm willing to trade Caterpillar and trade it to the upside, trade it to the downside, no problem, right? That when I get my signals, go and run. But from an investment standpoint, I cannot get involved with a stock with declining revenues where the declining revenues are just starting, right? Occasionally, if we've seen a long period of declining revenues and the comparables get favorable, yeah, I'll go after it. But when we look at Caterpillar, there's nothing really that cheap about the stock here with it. Price to book value is 5.2, right? That's nothing that's on a historical cheap basis, right? I mean, if you look at down here in 2016, it was about 2. So we're more than double what the price to book was. What about price to sales, right? Price to sales isn't bad. It's at 1.4, but it's also not near its trough levels at all. So we're not talking about a price of the stock relative to the revenue that's, really low. One big positive, though, for Caterpillar are their operating margins, and they have improved sizably. And that is one of the reasons where, if we start to see the market continue to go higher and for the market to just say, you know what, valuations, who cares, which we have seen some of, we could see Caterpillar still continue to go the upside because of their margins. And it's not just their operating margin, but they've been able to increase their profit margin in a big way with some of the restructuring that they did. So that is one of the real positives for them. But, you go look at dividend yield. We're not talking about a high dividend name or anything like that. So for me, I'm not all that interested. I'm not all that excited from an investor standpoint. And I'll kind of sit back and continue to look at it from a trade standpoint. But take a look at the revenue chart here projected going forward, right? We are looking at declines, quarter over quarter, year over year declines now, still for the next four quarters, right? That's if they hit their numbers, and the numbers tend to always be a little bit aggressive. So Caterpillar has gone from this 31% growth, 24% growth, 18% growth, 11% growth, and the growth in revenue has turned negative, and that has been a tailwind or a headwind for the stock. And so while, we have, other things with it, until revenue turns around and we're looking at easy comparables for revenue, it's not going to be one of the best performers out there, and not something that I'll want to be, too involved with. And you say, well, is it just a cat story? Well, no, it's a Deere story too. If you look at Deere, 11%. 19%, 7%, minus 3%. I mean, we're talking about declining revenue, for the next year on these stocks. So for me to want to be involved in the space, in the industry, I need to see what? I need to see there's a positive revenue catalyst here for them. And at that point, yeah, then I'm excited. For now, the whole concept of an inventory trough or some machine demand in some markets being historically low, that doesn't float my boat. That doesn't get me excited about Caterpillar, and I don't see how it will get investors all that excited about Caterpillar going forward. So could it push into the 150, 160 area? Yeah, it could. It absolutely could. Given what it is, but to be one of the bigger movers, it doesn't have the revenue growth that is needed to move like it has in the past. And yep, buy it on dips. I'm willing, but chase it on rips. I'm not. I'm not nearly as willing to do so there. All right. All right, so anyway, that's those are a couple things I wanted to share. Just taking a quick look at the market here. A couple things just fly off the page, right? One is that here we go, downside on the coronavirus, and basically it's been bought up, the rest of the day. We have seen that, over and over. And the other thing is Tesla. If you woke up, you probably saw Tesla down pretty big in the pre-market, and it's now green. Tesla announced they were selling shares, right, raising cash. And most times, for most companies, when they announce that, the stock doesn't just go down, it goes down big. For Tesla, though, this is a company where the bear case has been they don't have enough cash. They have a stock that's gone from 200 up to almost 800, and they're using that to now acquire much more cash than was previously thought that they could acquire, and it just blows more of the bear case out of the water. And so, we see bears, more short covering coming in this morning, here with it. So, those are two things that just kind of absolutely fly off the page right now in terms of what's going on in the market. And then Procter & Gamble, which we talked about yesterday, right? And, in terms of rhyme and reason, and the way things pull back and rally, it's acting pretty normal. Now, unfortunately, I'm not going to get a buy signal today unless we get a little bit more of a rally. But as I'd love to jump back in it for the challenge, but we could see it. A little bit more rally, give us a 3-7 crossover. But right now, our 3-day moving average is about 40 cents below our 7-day moving average. So the chances of triggering are pretty slim there for it. Thanks for hopping on. Have yourselves a fantastic day. And we'll talk to you this afternoon. Take care.